So, you want to start investing. That's awesome. You might think investing is only for the wealthy or finance experts, but that's not true. You can start building wealth today, even with just a little money. This is your first step, and it's the most important one. Imagine your money working for you, growing day and night. That's what investing does. One of the simplest ways to start is with an ETF, an exchange-traded fund. ETFs are designed to be simple and accessible. Think of them as a beginner's guide to the stock market that actually grows your money. The finance world tries to make things sound complicated, but the basics are simple. You buy a small piece of a company, and as it grows, so does your investment. ETFs let you buy tiny pieces of hundreds of companies at once. It's like buying a pre-made diversified portfolio with a single click. Forget the noise and the myth that you need thousands to start. With today's technology, anyone can invest. As a young professional, you have time on your side. Small, consistent contributions can become a serious source of income. Let's get started. Let's break down ETFs. Imagine a basket filled with stocks: Apple, Microsoft, Amazon, and more. When you buy one share of an ETF, you own a piece of every company in that basket. That's instant diversification from your very first dollar. If you tried to buy all those stocks individually, it would be expensive and complicated. ETFs do the work for you. Fund managers like Vanguard or Schwab create these baskets based on specific goals. You can buy and sell ETF shares on the stock exchange, just like regular stocks. The price changes throughout the day, making it flexible. ETFs combine the diversification of a mutual fund with the ease of trading a stock. In short, an ETF is a single investment holding many stocks or bonds. It's easy to buy, easy to sell, and gives you broad exposure. You're not betting on one company. You're investing in a whole sector or the entire market. History shows this is a smart, long-term strategy. ETFs are your tool for building wealth. They're simple, powerful, and perfect for beginners. You don't need expertise or a lot of money to get started. Just one ETF can give you access to hundreds of companies. That's the power of investing made easy. Here's the game changer. You don't need a lot of money to start. Thanks to fractional shares, you can invest with just a few dollars. In the past, you had to buy a whole share, which could cost hundreds. Now, you can buy a piece of a share for as little as $1. Open a brokerage account. Think of it as a bank account for your investments. Choose a platform that offers zero commission fees and fractional shares. Opening an account is quick and easy. Link your bank account, transfer a few dollars, and you're ready. Skip a coffee, invest $5, and you're an investor. Every dollar you put in is a step forward. It's about shifting your mindset from consumer to owner. Fractional shares make it possible for anyone to start. You don't need to wait until you have a lot saved up. Start with what you have, no matter how small. Consistency is more important than the amount. Small, regular investments add up over time. The earlier you start, the more your money can grow. Investing is now accessible to everyone. Take that first step today. The secret to building wealth? Consistency. Set up automatic investments so money moves from your bank to your brokerage account on a schedule. Choose an amount that fits your budget, $10, $25, or $100. Align it with your paycheck for maximum impact. This is called paying yourself first. Automation removes emotion and makes investing effortless. This strategy, known as dollar cost averaging, helps reduce risk over time. You don't have to think about it. It just happens. Let your investments grow quietly in the background. Which ETFs should you consider? Here are 4 beginner-friendly options. SCHD, Schwab US Dividend Equity ETF, focuses on strong, dividend-paying US companies. Great for building passive income. VYM, Vanguard High Dividend Yield ETF. Similar to SCHD but holds even more companies for broader diversification. QQQ, Invesco QQQ Trust, tracks the top 100 non-financial companies on the NASDAQ. Think tech giants like Apple and Microsoft. Ideal for growth. VNQ, Vanguard Real Estate ETF, invests in real estate companies, giving you exposure to income-producing properties without owning physical real estate. These ETFs are managed by trusted companies and have low fees. They offer different ways to grow your money, through dividends, growth, or real estate. Research each one to see which fits your goals. You don't need to pick them all, just start with one that matches your interests. Remember, diversification is key. These funds make it easy to spread your risk. You can always adjust your choices as you learn more. The important thing is to get started. Investing in ETFs is a smart, simple way to build wealth. Pick one and take action. The goal isn't to get rich overnight, it's to build a second income stream. Your first dividend might be just a few cents, but that's the start of something big. Think of each investment as a brick in a wall. Automatic investments and reinvested dividends add more bricks over time. Set your account to reinvest dividends automatically. This is called a DRIP. Each reinvested dividend buys more shares, which generate even more dividends. Over years, this snowball effect can turn small payments into hundreds or thousands in passive income. This money can help pay bills, cover expenses, or give you more freedom. It's a financial safety net not tied to your job. The process is slow at first, but it accelerates as your investments grow. Consistency and patience are your best friends. You're building a foundation for financial independence. Every brick counts. Start laying yours today. The final ingredients: patience and consistency. The market will go up and down. Don't panic when it drops. Investing is a long-term game measured in years and decades. Time is your greatest asset, especially when you start young. Automatic investing means you buy more shares when prices are low. Stick to your plan, even when headlines are scary. The most successful investors keep going no matter what. Start today, even if it's just $5. Open your account, set up automatic investments, and let time do the work. Be patient, be consistent, and let compounding grow your wealth. You're at the start of an incredible journey. These simple steps put you in control of your financial future. Build your foundation for freedom and opportunity. The best time to start is now. Lay that first brick. Remember to like, share, and subscribe for more helpful content.